Reason for this volatility is because the financial tightening. We are in the cycle that what they call financial tightening is that getting the credit, getting the loan, getting the mortgage, everything is becoming tighter and more expensive because Federal Reserve wants to fight the inflation. And the reason for the inflation was the economy was a little bit too good. People. Alright guys, good morning everybody. This is Andrew. Welcome back. Brian from Machu Picchu, Peru. How was your trip, Brian?
Oh, it was excellent. Couldn't have been better. Epic trip. Very challenging for me, but it was it was a really good trip. Enjoyed the time. So
yeah, excellent.
Yep.
So today, I traded AMD and TQQ. So the market stays volatile, really significant. The reason for this volatility is because the financial tightening. We are in the cycle that what they call financial tightening is that getting the credit, getting the loan, getting the mortgage, everything is becoming tighter and more expensive because Federal Reserve wants to fight the inflation. And the reason for the inflation was the economy was a little bit too good. People were spending too much, and it was financial ease in 2020 and 2021. And now by tightening, it's trying to bring down the economy, bring down the employment a little bit, so the inflation comes back to the target of 2%. Part of that inflation is obviously because of the war and supply chains, but part of it is can be controlled by demand, by making the it's called the financial tightening. So they want to tighten the market. And as you see, the SPY had its worst 8 weeks since the 1923 crash. So we've never had such a drop like that in the weekly, like 1, 2, 3, 4, 5, 6, 7, 8 straight week that is just falling off. We've never had such a thing that in a SPY since 1923, and then everything is coming back, and that's what should come back. And also in the financial tightening cycle, the people don't have the risk appetite. Investors don't want to take any risk. Like a company like AMD that used to trade at 150 and maybe would have been a bargain in that time, but now it's trading at 90 and not necessarily might be a bargain for investors. It's just nothing has changed. It was the appetite for risk taking in the Wall Street has changed, and the valuations are different. In the time like price per earning off a 20 was a normal in some sectors, and now that same number would be 10. Because the growth has been a little bit slowed down. So anyway, so this market gapped up a little bit and then sold off and just went red, and again coming back up. Obviously, there's not enough good news for the market to go back up, so it's a financial tightening period, and until the war is over and economic data is gonna show something positive, nothing is gonna happen. And again, a market bottoms when the economic indicators first start changing, like inflation comes down or employment goes up a little bit, and you get some sort of a macroeconomic signals, and then market starts reacting to that. So having said that, we traded AMD this morning. I traded AMD successfully. So I did a 1 minute opening range breakup. That's the bread and butter. It was selling off in the pre-market, came through the VWAP, and I went long at 92.80, popped up to the previous day close, and then on the way down I added more, and I got a stopped out. I think Brian also did the same trade, and then suddenly squeezed up, and I went long again at around 92.93, popped up all the way up to 94.20, and that's another successful trade that I did. So that's one trade, and then that's the second trade, and then on the way down I got a stopped out at the break even. So that was my most successful trade. And TQQ, I traded 3 times on TQQ. I wanted to the first one actually was a mistake. I wanted to go long AMD, but I pressed by mistake TQQ for 1 minute opening range breakup. I got it stopped out. Second time when it came up as strong, I said, okay, now I'm going to take a 1 minute opening range breakup. But the problem is under VWAP. 1 minute opening range breakup under the VWAP usually is not great. So I got it stopped out second time. came back up. I went long again this time because this is the time that AMD also started running. I think the market somehow started running. Went long, added more on the way, and then I added one time again at 28.10 for the break above, but I got stopped out. Eventually, I lost money on TQQ, but I made money on AMD. So even though I had one successful trade on TQQ, eventually turned out to be, yeah, so AMD was positive, TQQ red, and eventually I closed my day $9,200. So that's it. And yeah, so that's it. And I'll see how it goes. And Brian, over to you.
Yeah, no, I traded, my best trade was SIGA, SIGA. This was sort of one of my trade book plays called Lead Balloon. And name came up with by one of our traders. It's basically what it is. It's a stock that's gapping up, but trading below the VWAP going into the open. And SIGA was gapping up from Friday. Guess there was some news on it on Friday, and it was continued to gap up today, but was trading below the VWAP. So typically these sell off at the open. And I was also expecting a sell-off at the open too, because of the psychology of the market, I kind of thought that we were going to gap up. That based on this gap up, we were going to start out with getting some selling. So yeah, so SIGA turned. I got short on SIGA, covered it all the way down to about 1350. Unfortunately, I probably could have held it longer, or got back in when it got back down to that 9 moving average and then continued to drop. But SIGA was a good short. So yeah, that was probably my my best trade. Other than that, trading TQQQ and SQQQ and AMD, just sort of scalping those. Lost a little on AMD. So that was yeah, that was my day. So not a bad first day back.
Yeah, excellent. So we have a bunch of webinar this week. I think Ardi is having a webinar this week. Tomorrow I'm going to replace one of the webinars myself, because a lot of people are having questions about finding the stocks in play in this market, especially in a volatile bear market. Because the stock finding is a little bit difficult in this market, so I'm going to actually do the presentation myself. That how do I select my stocks and avoid these usual suspects that I'm putting, and what are the criteria that I'm actually looking for finding these stocks in place. So Tuesday strategy, I'm going to talk about that. Yeah, if you're an elite member, guys, feel welcome to join us. If not, you know, consider joining as an elite member. And yeah, so I'm gonna hand it over to Megan. I think she's coming at 7:30. I think it was a pretty good, successful trading day for me. And Carlos is here. We're gonna actually improve the quality of our production material, and so it's gonna help us set up a better, you know, video production, because we want to go live and you know, promote our live events. So some sort of a pop is coming, Qs are popping up. I see Tesla is coming.
Yeah.
Tesla
see XL
really destroyed, today, but now it's just popping up. Yeah, so
see the energy sector strong. SPY is popping back up again. Yeah, so it's just a choppy session right now. So I'd be watching these levels that we seem to be trading in right now, and seeing if we can break one way or the other.
Yeah, excellent. Tesla sold off, and again, it's all about this financial tightening. The market has to come down, valuation has to come down. You know, Tesla is back into almost a 52-week low, so the prices are the equal of the, you know, pretty much below 2021. Yeah, so it's pretty much like Walmart is back at the prices before pandemic. Amazon is at the price of the before pandemic. Yeah, it's crazy.
Yeah, I think stock like Walmart's really been punished based on their guidance. A lot of the retailers are seeing some challenges going forward, supply chain costs, that kind of stuff. So yeah, but Walmart could be a good buy here. I think Ed in the other room is long, just for an all-day hold, as long as it continues to trend higher.
Yeah, perfect.
And yeah. I jumped in on that with him.
Awesome, yeah. So Ed is holding Walmart for a strategy that is called all day hold. So he's guessing that Walmart is gonna, trend up higher, and yeah, that's interesting. And he wants to, I think, get to 40% of the gap fill. So that's a very interesting strategy that Ed has.
Okay.
All right, guys. So over to you guys, and all the best. Cheers.
Yeah.